Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, guys, and welcome to the 11th of August. Look, I'm trying to make it dramatic. There's a big CPI print today, okay? I'm not so sure it's going to be a huge deal, but it could be a huge deal. Could be everything, but maybe it'll just be so-so. I don't know. Let's come and look at the charts and see what happened overnight, though, huh? Where's my mouse? Mouse, there you are. Okay, so the S&P 500 yesterday doing pretty okay overnight, and then the regular session, some big little failures. It was kind of interesting. You know, we keep getting like those sell sweeps, and market's been ignoring them, but yesterday, late in the day, they kind of succumbed to it, you know? You know, this opening of yours is really cool. I should have said, yeah, you know what? I'm really proud of the opening. I think I did a really good job with it. And I made all of the music and everything. Okay. Anyways, Treasuries yields continue to increase on us. Look at this, man. Okay. So they've been coming down, and then we got this CPI print. Like, so if the CPI print is hot, how far down is this going to go? There really is a chance that this could just collapse. Okay. So and the issue here is over in the E-mini is like the taper is coming. Okay. And when that taper comes in at Jackson Hole, I don't think that this, let's just go up all the time every day is going to fly anymore. So oil, also, a lot of the commodities were experiencing some trouble overnight. Copper in particular, there's some stuff going on with, a mine. I think it's in South America. They're still negotiating. So I think that's part of what's going on over there. But gold and silver, well, they're doing better than yesterday, I suppose. But come on, there was still that thing. It's going to be so funny. This CPI print comes in and then gold and silver skyrocket up and it recovers. That would be the most ironic thing that could possibly happen. But that's probably more optimistic for gold than we can really hope for. And then we got the dollar, which recently has been strengthening, strangely enough. Now, when we come back over here to the main view, you can see Treasury's actually not all that. I'm tempted to just go short there. Okay, we'll do it. For fun, we're just going to go short. I'm actually thinking, though, if I get a move in my favor, I want to immediately get out of it. So, because I'm worried that it might be bearish for treasuries, but not exceedingly so. And therefore there might be a little bit more mean reversion on this one than we expect. The numbers, what are we looking for? We're looking for an estimate of spot 5 when the previous was spot 9. That's the core inflation rate month over month. So, yeah, we're looking for spot 5 for the regular and then core spot 4. Okay. And remember, when we get the number, we're going to need to take a good look at we're going to have to take a good look at the crosstabs and see where the increases were coming from, right? Core inflation rate. Something going on. Oh, it is. Oh my gosh. Corn is just going off this morning. Huh. Thank you for pointing that one out for us, Brett. I don't keep tabs on that one as closely. So now in other news, there was the vote-a-rama last night in the Senate, and I have to say, I see some political risks out there. Let's put it that way. So here, the big story on Political right now, GOP praise Sienna and Manchin pare back Dems' big spending bill. But the thing is, Senate adopts budget that paves the way for $3.5 trillion spending plan. So I'm unsure exactly how this all works, but I think that what's going on here is they pass a budget for their $3.5 trillion, and then it's going to go to the House, and the House is going to try and pass it. And then it comes back to the Senate and they do the reconciliation. And when they do reconciliation, that is where they may have to pare it back based on what Sienna and Manchin put in. Right? Just for the record, Christian Sienna kind of. I have to say she is a good politician. I'll say that much. She has come in at critical points. She knows how to play the game. I think she's been doing a good job for Arizona. But whether she will save us from the Democrats' $3.5 trillion spending plan, I'm not sure. I'm also unclear if the more controversial things, for instance, amnesty, are included in this, because then you wouldn't be able to use reconciliation. And then, is there like a poison pill stuck in this already? I don't know. So I'm a little confused at the process and what the next steps are and everything, because I read this headline and I'm like, so does that mean that the 3.5 trillion spending is actually happening? Does it have all the bad? There's all these questions that I have. So it's going to be interesting. But here's another one that I'm seeing. This, I haven't seen this many places, but I was just, I was trying to find everything I can. I guess that, everybody hasn't woken up yet. So I'm sure that, in 2 hours or so, towards the end of the stream, we'll come back on politics and maybe we'll get a better picture of what's actually going on. But there's this one over here. Joe Biden looks divided. Well, where is it? A New York Post, Biden checking if he has power to order universal masking for school kids. That's the headline from the New York Post. So now, whether or not kids should mask up at school is besides the point. If the Biden administration did this, that would be like the freaking apocalypse, man. Like, holy crap, a federal mandate for masking up at schools, parents would flip. I don't think you could it would be like touching the third rail, man. Like, it would really be like the third rail, because when you start talking about people's kids, man, over an issue that people have, or at least it seems to me that people have very strong opinions about it. Like, you know what I mean? It could be ugly. It wouldn't make a difference anyway, just piss people off. No, I think that states would say nope. I think that there would be some real political volatility around it. In as much as that it could affect a bunch of other things, and that it could even affect markets. So I kind of got those things on my docket on the political side, just kind of keeping track of it. And it kind of all just coincides with, here we got the CPI, and then we've got the Federal Reserve is going to taper. Okay, well, here we go. They have pulled. We got 30 seconds. Oh, I need to turn financial juice on. That would help. Okay, so remember that they're looking for spot 5 and spot 4 on the core. Oh, I'm just saying it wouldn't make a difference with the spread. Yeah, it's all, yeah. Okay, so they moved up. It's in line. It was worth a try. How much slippage did it give me? Oh, okay. Look at that. So let's come in here and look at the report. The E-mini liked that one. Okay. So here we're looking at July. Food was spot 7, down from spot 8 before. Energy spot 8, which was up slightly. Energy is still pretty high. All items, less food and energy. Spot 3. New vehicles is really chilled out. Look at that. Used cars and trucks, spot 2. Medical care, okay. So the numbers are about normal. I mean, spot 5 is still hot, right? But very, very much suggests that some of the worst of it is over. Now, the problem that I have here is that I don't know if that really makes a huge difference here on the Treasury side. The E-mini would certainly like that. But then again, like when I think about it, this is just kind of like, okay, the inflation thing, maybe not such a big deal anymore. There are other things on the horizon that are more important that maybe we should be concerned about, like a taper, right? See, they're going to come back to that open. I wouldn't be surprised if they come back to the open and push down. That was a little too slow there. It's like I want to try and catch a tick here ahead of this, and then nope, too slow. Nope, that was bad. That sucks if I'm only 8 in line. Come on. Was it open? No, that was the CPI report. Okay, that's a little better. Now, the Wall Street Journal's tagline here is inflation stayed high in July with U.S. consumer prices rising 5.4% from a year earlier as the economic recovery gained steam. So this is a good point. Like, even though the number was in line, if we continue to get 0.5%, like if all of these numbers stay what they are, like let's say until the end of the year, that's still a bit of a concern. Rand Paul has been suspended from YouTube for 7 days over a video claiming that masks are ineffective in fighting COVID-19. I really think that we should talk about the empirical evidence on this sort of a thing, especially if we're going to create a nationwide mandate. And then you're going to say, we can't even have a discussion about it on YouTube? Come on. Now look at that. Thank you. Easy. Easy peasy. I wish that opportunity was still there, because that one was like really, really clear to me. Okay, so now that I've kind of like evened everything out, I'm going to try and do a position trade here, okay? When says I'm not weighing in on masks. The only thing I'm going to say is that if there was a national mandate, like, man, it would be like a political apocalypse. Like, I can't even imagine. It would be so much drama. So much drama. Because my legislature, like, literally passed a law that said that they can't, they can't impose a mask. Like, the county can do it, but the legislature can overrule them. And like, it was like a special vote and everything. And I know that my state was not the only one. So if the Biden administration came in and said, we're going to impose a mask mandate nationwide, that is going to be a huge state rights versus federal rights. It is going to be such it would be such a crazy political issue. And like I was saying, like, I know it seems kind of silly, but like something like that could have impacts on the market, even if there's enough drama. I mean, probably not, but I think that there's some risks there on that sort of thing that we need to consider. We need to keep an eye out, because the market is a little vulnerable, right? Like, there's that one. I think that the bigger risk that you got to think about is the debt ceiling, right? Like, sometime before November, they're going to have to pass the debt ceiling, and the Republicans have said straight up they're not going to help. So how are they going to raise the budget ceiling is like a really big question too, right? And you're going to have the Fed tapering at that time. Like, this is going to be like a double, triple whammy sort of a deal that could be coming up in a few months. But not having to deal with the inflation being super crazy certainly would help, yeah? What kind of analysis is this? It's political analysis. It's an important part of markets that you're going to have to factor into your trading from time to time. Not as much as you used to, but man, the Trump years, it was so much fun. I know a lot of people didn't like it, but I thought it was fun. Okay. So when I caught that, I was like, well, this is going too much for me. Oh, you're talking about on the screen? Okay, well, so what you're looking at is a depth of market. So we're looking at limit orders resting on the exchange, right? This blue column are limit buy orders, and this red column is limit sell orders, right? And then the market orders are matched up against those orders, and that's the orders that you see coming through in the middle, right? So I can see 550 have hit into it. If it ticks up and then it's been a few seconds and it ticks back down, this column will reset so that I can see how many more I've hit into it. Now 263 since this ticked back down. And that's the mechanics of what you're looking at. Yeah, so some people call it level 2. I avoid using the term level 2 because level 2 means something very, very different in equities markets. So I think the more correct term to use is it's the depth of market or the order book. So we want to monitor these changes in the liquidity because that tells us things about how it can end up moving, right? So if I have, let's say 10,000 buy orders come into the market, intermixed with 5,000 sell orders, like how would that impact where we move? Well, to really know how it would go, you have to be able to look at the depth of market and monitor the changes in that and say, okay, like, are they absorbing or pulling? Because you'll see sometimes, so like here at 18.5 would be an interesting case. Are they able to trade up a tick with only maybe 600 contracts? And then what do they do at 19? Or do they stack and more start trading there than that? Okay, so like 1291 to take it down to 18, 340 at 17.5. So the guys at 17.5 just kind of gave up and pulled. Right, so what does that tell me? It tells me that we could move down on very little resistance. Like it wouldn't require a ton of contracts to push them if they're going to do that. But it's probably because they're going along with correlations and so forth. Now the dollar is coming down. It's kind of funny. Like inflation's not so bad. Sell the dollar. It's hilarious. But it's because there was a flight to safety trade going on in the dollar. And I think that's why the dollar is coming down on that one. Did you read that Kumo resigned? Yeah. I mean, I thought it was a foregone conclusion that he was going to resign, and I was surprised that it took so long for it to happen. U.S. unemployment benefits will disappear for 7.5 million workers. We could see some drama. Well, you would think that would have an impact, but I have come to the conclusion that the people that are on that assistance right now don't really need it. Like I know that's like an awful way of putting it, but I think that a lot of the people that were getting that kind of unemployment were people that they have another source of income, or maybe they live with their parents. Like it's young people that doesn't necessarily have to work, and so there could be a lot of them that the unemployment dries up. They maybe they don't even go and try and get new jobs, right? And it's not a big deal. It's not as good for the economy. So I'm not saying that it's a good thing, but I am saying that it's not the end of the world. What happened to Kumo certainly wasn't a result of Republican. Yeah, well, it was really... I read last year the right would go after Kumo to squash his political aspirations. Looked like Kumo was already as a star as they didn't have to work very hard. Yeah. He was all himself for sure. Like, it was really like the thing was, remember at the beginning of the pandemic, all of the media fawning over him, saying, "Oh, look at the White House's response and press conference, and then look at Kumo's press conference." And we were all sitting here like, no, like Kumo screwed up bad, guys. He's been doing a terrible job there, and it's a problem for them. And look how it turned out. Like even without the sexual abuse allegations, I think that Kumo would be in a difficult position right now. Because of them hiding the deaths. Can you talk more about returns you aim for as a day trader? Okay, sure. So, I think that when you're starting out, one of the things that you often think is, okay, if I can make X amount a day, and then I would be able to go on my own, like I wouldn't have to have a day job. And so there's a lot of focus on what is actually realistic for an average daily return. And my experience with it has been that retail day trading is extremely hard, and that success in it is extremely unreliable, and that if it's your sole source of income, that that's going to be really stressful sometimes. So it's probably better to have a regular day job, or a spouse or whatever that's making money, so that whether you make money or not from day trading is not really a big deal. And when you make money or you don't make money, you just take what is there. And all you focus on is trying to trade as well as you can. Now, how long does it take to achieve consistency? I would say I've been doing this in futures for 4 years, and I don't think that I'm that consistent. So, yeah. It's very hard. I mean, and it takes a long time. One of the things that I've been kind of learning is like, there's a lot of things that I kind of understood, like the guys are saying it and everything, but like, did I really understand it? For instance, the prices are inelastic theory. This is kind of a competing theory to the efficient market hypothesis. And it states that when prices move up or down, that it doesn't really have a huge effect on the supply or demand for securities. And when you put that kind of context on things, then you have to say, okay, that means that really everything that I'm looking at the chart is potentially useless. Like, sure, there's information there in the chart. Like, we just had a CPI. We just had a CPI release, and the Treasury market moved up, which I think is a very clear indication that the Treasury markets, think that is dovish to some extent, because the Federal Reserve won't have to increase interest rates to deal with inflation, right? The only reason I'm able to pull that information out of the market, though, is because I know what the context was. I know why that happened, right? But if nothing was happening and something like that came up and there was no like news event, or let's say it was more of a gradual move, how do I know that it matters or not? Because it could just be noise, and that noise, orders with absolutely no information, somebody rebalancing their portfolio, for instance, has absolutely no informational content in it at all. And how would I know that it did or it didn't? You can't. So a lot of what we look at on the chart is completely meaningless to us, right? I understood that, but I didn't understand it on that level. I didn't understand that, like, yeah, markets are really inefficient, and ergo, this whole idea that everything is factored into the price and you can see it on the chart is kind of ridiculous. Hollywood isn't closely married to the Democrat Party for nothing. That ties it bind and all. Well, I think that that's kind of more of a personality sort of a thing. People that are actors are more likely to be liberal because they're more open. Mm-mm. I don't consider them, yeah, sure. Progressive, let's say. What we're seeing on the left is really different for sure. And then it just comes back to, like, are there some political risks out there? I think for sure, because this budget that they're trying to pass, this $3.5 trillion budget that they're going to pass without any Republican help, it seems, is really quite crazy. Like it's really like one party is really trying to like fundamentally change the role of government when you really think about it. And you're talking about something that if the progressives had their way on everything, if they really got everything that they wanted, there would 100% be a civil war, no question about it. Right? Like, that's just how, like, it's not just like they're really far left. It's like they're really far left and they're pushing for things that the other side of the country will not put up with. It's hard to consider people willing to entertain control measures by any means necessary as liberals. Yeah, it's for sure. But that's the thing, is that the Democrat Party has moved very much beyond. I mean, it's kind of a thing in the Republican Party too. It's just that the Republican Party kind of fights with its constituencies amongst itself on this sort of a thing, whereas the Democrats are just kind of letting the left kind of pull them along. But you have to realize that there is a wide swath of people in the Democrat Party that are not Democrats because I really believe in liberal values and these things like liberty, and we really need to hold them. And, you know, there is a wide group of those people that are like regular people, and you scare them and they let you do whatever you want. You know? Like I'm just saying, if Joe Biden was a genocidal dictator, their party wouldn't stop him. The people in the Democrat Party wouldn't be the ones trying to stop him. You know what I'm saying? So it stands to reason the people calling everyone fascists are in fact the fascists. Well, I don't like to use that word just because it was really a political ideology specific to that time and country. But to the point that there are some people that are totally on board with complete despotism. Yeah, 100% there are. And I'm sure that there's a lot of them in the Republican Party too. I think that the Republican Party would put up a little bit more fight on that sort of a thing, because the Republican Party is really like, you violate the Constitution, it's a big no-no. Absolutely not. And they kind of will pick and choose like which ones to really be concerned about. But anyway, they just splice it. You violate the Constitution and there's kind of problems, you know? Like, you're never going to see Republicans advocate for the silencing of speech. Even when they were on the other side of this during the Bush years and everything else like that, they were never saying people shouldn't be allowed to say what they want to say. but you 100% see that on the liberal side these days. Especially in the sense of using corporate pressure to enforce political mandates, circumventing pesky constitutions. Well, the thing is that I would like companies to be able to moderate their websites the way that they want. Is just that, like, the issue is that these companies kind of came about by being the public square and being places where you could say anything, Twitter in particular, but I think YouTube very much to the same extent. Like, YouTube in part became popular because you could post anything and you could get content that you couldn't get through mainstream media, you know? And for them to now come back and say, change that is like, you know, really disappointing at the very least. And I think that once you become the public square, like, I don't think that you should be allowed to do that, but probably the best solution is that you get people to use a better website. But then I guess what you're talking about is, like, now it's turning into like PayPal is saying, oh, you can't use PayPal. You can't. Like, they're denying your access to banking. That's, like, I'm surprised that there is not already a law that prevents you from denying financial services to somebody based on a political opinion. I'm surprised that they can do that. You'd have to be blind, deaf, and mute to miss that the corporate world has adopted a particular set of political ideals. Well, you know what? I don't think it's so much that. Like, I think that the people that are doing this at these companies don't realize how radical what they're doing actually is. Like, they're thinking from the perspective of, we're good corporate citizens and we're doing the things that are expected of a good corporate citizen and being the good guys and doing these things by denying these certain people, you know, services, by not being involved in hate speech and yada, 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 right? See, because there's just many of these, the corporate world, it's so much on the coasts now. They live very much in the left bubble. And I don't think it occurs to them how insane it is to, like, deny a person financial services. You know, it took less than a decade to have the ideals of the Occupy Wall. No, they didn't occupy Wall Street. No. I think most of what Occupy Wall Street was really promoting kind of turned into disappeared. This is the woke thing is something totally different. Same people, but I think it's a completely different ideology they've latched onto. You got to remember that progressives are very prone to attaching themselves to unproven ideas. And so they will go from one ideology to another that are completely, like, have you ever wondered, all of these guys that were Bernie Sanders supporters, and then they turned around and they became Republicans, or they became Donald Trump supporters, because there was a good number of them, believe it or not. And have you ever wondered, like, what kind of change has to happen in somebody for you to make that big of a leap in political ideology? But I think that the reality is that there are some people that can make those kinds of ideological changes very quickly because they have very open personalities. Where do you think wokeism came from? I think it came from the universities. I think this all started with, like, the the ideologies were all developed at universities, and it all started with this stuff even before Donald Trump, I think, a little bit, where they were like trying to create these safe spaces on campuses and things. That's where I would say it came from. That's where it started. That was post Occupy Wall Street. Was it made of old boomers or college students? Well, it was college students, but I don't know if it was the same people. Because that had to have been like 2012. I don't know. Like that was like 4 years after Occupy Wall Street. So I don't know if you could say it was the same people. I mean, it probably was similar people, but I'm not talking about the people. I'm just talking about the idea. Like the origins of the ideas was from a completely different place. It started among the intellectuals in the universities. Australia's new Chief Health Officer, Dr. Carrie Chant, whenever you leave your house, don't start up a conversation. Do not come into contact with anyone who would pose a really? John Authors, it is all about base effect. Car rental inflation down to only 73.5% from 87% last month. Airline inflation now only to 19%, down from 24%. But even with the extreme transitory COVID effects beginning to fade, overall inflation is unchanged. Other stuff is picking up. I am still of the opinion on the inflation side. I think that there is a risk of inflation getting out of control, but I don't think that we are anywhere close to it where that would happen. Like, I think that you would have to be in like a really completely recovered economy, everything going fine, and then everybody has some money and they start spending it, and it becomes a problem. And certainly the changes that are happening with like personal income, those aren't going to be reversed, right? But in the long term, I think that there are still generational pressures and global pressures that are deflationary in nature, and that keeping that 2% average inflation target is probably going to be a lot harder for the Federal Reserve to do than people think. Might not be so hard next year or the year after that, but over the next 10 years, I think that they're still going to have a hard time. Well, there's certainly a tinge of Marxism to all of this. Yeah. I find it really telling that whenever these, like with the Black Lives Matters movement, it comes out and then all of a sudden the people that organize the national organization admit that they're communists. And it's like, oh, yeah, okay. Because it has all of the hallmarks of how communists try to do their thing. It's 100% they try and pit people against each other on a class level. There's no question about it, and they'll try and hide it. I don't think that everybody that does it, is doing it because of communism, but I think that a lot of the people that originated the ideology were partial to it. Yeah. Same conflict can be seen in COVID messaging. Well, okay. So now because one of the things that I see, I don't know if this is what you're hinting at, but like when you get on patriots.win, there are a wide group of people that are terrified that anybody that hasn't been vaccinated is going to be thrown into an internment camp. Like, that's what they think is going to happen, and that they're going to use COVID to create class warfare. And I think that that's a very silly and irrational fear. I think that you're going to have this Delta wave, And the politicians are going to very quickly find that COVID doesn't really move people's feet anymore. And by the time the midterm elections come along, it's going to be, well, okay, but when you were in power, you tried to abuse your power and impose all of these draconian measures. Oh, yeah, and you increased the deficit by you increased government spending by trillions, and it's going to be a huge weight on their neck. Usually says I'm not that deep, just an observer. Oh, okay. Look at that. And they finally came through my brace. They dropped pretty hard. Man, I still get on Twitter, I still get Chinese trolls harassing me on Twitter. Isn't that crazy? Like, it's been like a month. Thanks for all the likes. Are we doing well on likes today? Oh, somebody gave us 52 likes. Well, thank you very much. I would prefer, though, that you don't hack YouTube to push our videos. I don't think it really makes a difference, though. So we're not gonna focus on it too much. For me, there's a difference in recognizing narrative strategies and predicting the outcomes of said narrative strategies. Well, yeah, but what I'm saying is that, there's a group of people that are prone to adopting that this narrative is happening that's super crazy, and we need to all be really terrified of it, when really it's like, just a few dozen people on Twitter saying it, and it really is not something that's going to be impactful to anybody, and that it's really not as widespread as they think. Like with this woke thing, I think is a really great example. So it's totally cool to look back at history and say, okay, with these certain decisions, how might slavery have been playing into that decision, for instance, right? But it's not cool to separate the classes based on race, for instance, which was happening in one school apparently. Right. And there are not very many people in America that think that it's a good idea to separate the classrooms based on race. Okay. I think that you probably would only get like 5% of Americans to say, yeah, we should do that and adopt that nationwide. Right. So it's really not something that you have to be concerned about, but it did happen. It did happen. And I'm sure they're going to put a stop to it, right? But I'm just saying what will happen is people will use that to get you really overly triggered or excited about a particular thing, when in reality it's not something that you need to spend a whole lot of time thinking about. American communism with American characteristics. No, I don't think we're that close. Like the thing is again, I don't think that Americans are really align up with the Democrat Party's agenda very well right now. Like, I think that Americans, they want to be better on the environment, for instance. They want to have strong social programs, for instance. But I don't think that Americans want Bernie Sanders' vision of America. I think that if Bernie Sanders ran for president, that he would be soundly defeated. So, It's just kind of a question of, while the Democrats have some inkling of power, how far are they going to let the far left of their party take it? And the real battle is going to be this $3.5 trillion budget, I think. I'm surprised that it's as far as it got, but it does sound to me like there's more to come. So we'll see if Sienna and Manchin, what they do, if they buck their party or what. But you're fine with the sphere of, no, I'm not. I think that what I'm trying to say to you is that the reality on the ground is very different from the picture that some people try to portray. I mean, like we could go through these issues and we could look at them with like surveys and things like that to see what people really believe on these particular issues. It's really easy in politics. Well, let me approach it the opposite way. It's very difficult in politics to stay grounded because your party has a vested interest in giving you a view of the reality that is inaccurate. They want you to think that your party is, they either want you to think that your party is just the greatest and that everything is going great for you, or that everything's falling apart and we need to do something, act fast now, or it's going to be the end of the world. When that is rarely what's actually going on. I'm still getting likes. I'm really, what does that? Why would you do that? Like, if bots are coming in and liking, why? It doesn't do anything. Like, you see the number of concurrent viewers isn't changing. And once this stream is done, not very many people watch it afterwards. Because most of our traffic comes from search. So the only thing that's going to help my channel is Seth making more and better videos, right? He's hooking you up? I guess. I mean, I appreciate it. I'm just saying it doesn't. If I'm actually concerned that sort of aberration in the stats and stuff doesn't help, but I don't know. One dictates the other on a long enough time frame. But it's not like again, so like a fair comparison would be the hippies movement in the 60s, okay? Like, there was some things that people like totally 100% agreed with, right? Like, there was some things going on in the Vietnam War that they didn't like and things like that. But when what was it the Evergreen, what was the name of the college? No, it wasn't that. It was in California. When college protesters were shot by the National Guard, you remember that? And afterwards, surveys showed that the American public thought that the college students deserved it. And that whole movement from the 60s completely collapsed. Like, they thought, all of the guys involved in that thought, this is it. This is going to be like the big change in America, and we're going to, like, the nation is going to completely change, and we're on the precipice of something big. And then all of a sudden, in a matter of months, the whole thing's just completely collapsed and it disappeared. Right? And that is the nature of many liberal movements is they come in, you get these people that are really open to new ideas, so they attach themselves to this idea, and they get a high out of feeling like they're a part of a movement, and then all of a sudden, all at once, the flaws in that movement and that ideology are exposed, and they leave, and it just collapses. And this happens over and over and over again. And it's the same thing that's going on with like the wokeism and the critical race theory in schools. Is like they've been trying to, that's why they're always kind of sneaky about it, because the people that are really pushing this kind of know that if it gets big too fast, that it's going to collapse very quickly because it won't stand up to scrutiny. And that's what's happened. Is like last night when they were doing Votorama, a provision about critical race theory was put into that resolution that they voted on last night, and it passed. Right? Did it collapse, or did it? Well, I guess it evolved. But if it just evolves into something more stupid, then that's just the same thing's gonna happen, right? Low-key segregation are just going to disappear in 29. I don't think so. Not all the ideas are bad, just the fake ones. This is the thing, is YouTube does not push the video to subscribers as much as you would expect. And I think that the reason is because whether it shows my stream to a subscriber is entirely dependent on how often they've clicked on it. And if they're more interested in watching the one-off videos instead of the live stream, it's just not going to show it to them, right? So if we want the stream to have more viewers, you either have to pick up on like a subject all of a sudden that goes viral, or you have to pull them in through other means, which usually means them finding our other videos on search, and then they subscribe, and then they decide, they start coming in every day. It has more to do with how YouTube treats streams than anything else. Plus, we're not, what we're doing right now is not unusual for summer action anyways, so. So we came down to the 15, kind of bounced a little. It's really slowed down. They really seem to have found some semblance of balance around 18. AO says, afternoon, how are you? I'm kind of thinking about maybe trying to work my position in a little bit more. I don't know how much of a risk I have to worry about. When it was up here, I wanted to add contracts, but I felt like I didn't want to take the risk because it was still moving too much. Now I'm feeling like I could maybe risk it, but I don't know if I can risk it at 18.5. So like that one is kind of pulling and nothing's happening. Okay. Alex, how are you? I didn't notice you there. No, maybe 18.5 was the wrong place. So do you think that this CPI report will have a large impact on whether or not the Fed tapers? Because I think I've been going and saying, well, they're still going to taper. But maybe the market is now thinking that, oh, there's not as much pressure, so they're not going to do that. Very interesting. Fed's Barkin says the U.S. might need a few more months to reach the taper target. Oh. Oh, well, see, now that would change things, right? Let's move this down because we are going to have the E-mini here in a bit. Now, I also kind of wondered, because this is such a big move up in the E-mini in particular, it seems. Yeah, it really is. How much can the E-mini really go? Because I'm not so sure that just results in a trend day up in ES, you know? It's right on support. Okay. Say it looks nice. Well, it's certainly been moving well. What I'm worried about is that the trade in the E-mini is there's a really good push right on the open, and then that's the high for the day, you know? Maybe. A little bit of a curious steepening going on here. Do you think Sienna's about? No, I don't think that it would be a blow to the downside. No. No. So it wouldn't surprise me if at some point later today they were to somehow make it to the low of the day. But I don't think that you can see like a blow through or anything like that. In fact, what I'm trying to do here is really much more of I think that we're going to mean revert somewhat. The question is still, when does or should the Federal Reserve taper? Right? Well, the U.S. might need a few more months to reach the taper target, so that mean that we don't talk about it at Jackson Hole? Because I think the market expectation is that they're going to talk about it at Jackson Hole. I don't know if that CPI print changes that or not. You know? Where's that coming from? Okay. Well, we still got about 4 minutes here. Awfully quiet. Haven't heard much from Financial Juice lately. Market orders still very aggressive. Not very aggressive, but you can see that they kind of have it. You know, like when it comes down to 19, you're not getting people to hit us at 18.5. But they are willing to take 19.5 and 20. Yeah, you told us yesterday he's from the UK, but I think RJ Will is maybe looking for more granularity than that. Like what city? 2 minutes, yeah. 1 minute to the open. Ugh. I'm sorry. I was, I did a workout the other day that had a lot more upper body in it, and I'm feeling the 2 days delayed onset muscle soreness. And I just feel really tired today. What? The Straight retweets John DePore. This market is about stock picking right now. CPI having little impact. Yeah, okay. You say so. Yeah, it was only 20 ES handles. Buff Maxwell is sore. London. Oh, okay, cool. Okay, so there's the open. You notice way more mixed than you'd expect, huh? Or than I was fearing. Let's say I was fearing that it would be like a they'd just go, but no, mixed. Do you find the analysts just try to pump up their stocks? Oh, well, there's certainly people doing that. I'm really not interested in pumping stocks. Like one of the issues is that I'm like, the channel would be a lot more popular if we talked about stocks more, but like, how do you do that without being like, here's a stock you should buy and here's a stock, Yeah. YouTube recommended $1 Million Trader show to me. Ugh. Like Kathy Wood saying BTC to 1 million. It really was like there was that point where all of these guys trying to pump Bitcoin. And I think that Kathy Woods really tries to play that game. Yeah. Super sketch to me. I'm a little concerned for the E-mini now just because we're not really seeing the orders come in. I mean, it's not like a huge deal, but maybe they're going to have to drop back quite a bit. I do still seem to be following the 5-year. But like the 5-year is trading through on very low volume. I'm trying to bump Tesla to 4,000. The thing that irritates me about Kathy is that really the only thing she did that was really worthy of talking about was that she invested in Tesla. I think almost everything else they do with that portfolio sounds crazy. At least I'm not going to buy it. Like someday the Federal Reserve is going to taper. This constant flow of orders to buy everything is going to stop. And who's going to get hurt the most? It's going to be all of the meme stocks. And yeah, at that point, that's probably when Kathy Woods goes under. Oh, Narya, you day trade in Indonesia and you found about futures? Hey, thank you very much. Well, I'm super excited for the micro treasuries to come out, and we'll have like a super cheap instrument to play with. And now I'm curious here to see, if the E-mini drops another little bit, if the flight to safety sort of trade comes into the E-mini. So it looks like they're having a really hard time holding these price levels for now. Remember my line, not the only woods to crash. Yeah. That was so funny. Oh man. That one day when they really took it on the nose. But I think they've since recovered that, haven't they? I don't know. I haven't looked at a chart of that one in forever. Yes, this is a pretty good excursion from the sellers. Here we go. Jake Sherman, I've been waiting for this. House Dem moderates are great letter writers, but they've been unwilling to use the leverage they have in the caucus to come back to DC at the end of the month with the best opportunity to get what they want, and they're thinking about it. Lindsey Graham says radical Green New Deal aspects of the budget resolution will lead to a higher energy prices. Thanks, Lindsey. He says maybe along here. I know that one is uncharacteristic of you, but no, I think I need to wait. The problem I continue to have is that sometimes I can see things in the treasuries. This one that I'm doing in the treasury, I think, is a little bit more of a gamble. But in the E-mini, for some reason, I don't feel confident about having an edge over there at the moment. Yeah, get out. It was like just as soon as it seemed like it was going to turn up, and then they kind of fell back down. I don't know if that excursion was a huge deal, but yeah, that was a little better. I mean, I'm tempted to go along with him, but I'm not seeing quite the thing I want to see in volume yet. Well, that's maybe a little better. Oh, you already took the 2 points. Oh, there you go. Good job. Okay. Wow, you got lucky there, Ace. Wow. This is always luck with Ace. I mean, they like tagged you and they almost to the tick turned down, man. Yeah, to the tick, they turned right there at your target. Well, 19 goes off. Okay, they took it easy that time. Might as well go short there as well. Okay, look at that. That's a little bit more like it. That was really nerve-wracking there in the treasury, and I wasn't sure if I was doing the right thing. And actually, I'm still not sure if I did the right thing, because my thinking there on that. Yo, thanks. I live for praise from you and Seth. Well, you know what? Just because he was lucky doesn't mean that it wasn't a good trade, right? But you was lucky that it was like to the tick and then it came back down. Because otherwise, he would have been like if he had taken it literally one tick higher, and it would have been a scratch for him. Well. Interesting here, the E-mini at the moment. So there's been a steady increase in buying here, but it has not really led to higher prices in the S&P 500. And the treasuries kind of fell down here. So they're kind of at a critical juncture here in the ZB, because we'll see like if it goes to a lower low. Not that it matters per se, but psychologically, I guess it does. I guess the point is you are going to see like kind of a decision point sort of a thing go on there where they're going to leave you with a ton of question as to whether or not they can go through it or not. What's this? Code, like language, is only an imperfect representation of human thought. It can never fully express what was intended, and there will always be some scope for misunderstanding and willful misinterpretation. No code is perfect, and no system designed and implemented by humans is ever fully secure. Invest in technology by all means, but trust it at your peril. Oh, that's so eloquent. Sure didn't work. The E-minis being a bill right now, don't you think? Oh, so I didn't tell you guys. So some exciting things happening. So last night, because remember Gary Norton has a website up and he's creating a new education course. So I've been talking with him, and I got him to do a video conference with me last night. And oh my gosh, I'm gonna have to pare the video down a little bit. Like I recorded it, and we'll put it up at the end of the month. I'm gonna have to pare it down a little bit because otherwise it's gonna be 2.5 hours. Maybe we'll pare it to 2 hours. I don't know. I don't know what I'm gonna do. Okay, and then we talked for like 90 minutes after that. So I talked to him for a good 4 hours. I talked to Gary last night for a good 4 hours, and it was great. I had so much fun talking to him. And I'm not going to reveal per se what he's got, but I am super excited for what he's doing with this new education website he's got. I'm super excited. Caleb says, I don't mind 2.5 hours. I think for you guys that are like here every day, I think you're really going to enjoy it. Maybe a lot of it is kind of talking to the crowd, but the thing that surprised me about it, because Gary is kind of, I would say, he kind of has like a soft spoken voice, you know what I mean? And I was wondering, okay, how is he going to do with this kind of like a live conversational format? And he was phenomenal with it. And it was like everything that he said was like so quotable. I was like, how do you come up with all of these great analogies and ways of talking about the market? Well, he really understands the market. I mean, you have to understand. I'm just a guy trying to figure it out. Nothing too special about me. He did it for banks, and probably hardly anybody that you're ever going to have talked to retail traders with more experience than him. And so he can talk about markets really very freely and confidently, and it was a great conversation. It's gonna take me a few days to recover. Like sometimes when you're talking to people, like you get that high just from talking to people. I think I'm going to be going through that the next 2 days. And then like they come down off of that. It was a good conversation, but I'm going to edit it and we're going to put it up the end of the month. So keep an eye out for that. I'm still thinking about how I did this in the treasury, because the idea that I'm trying to do is, take a couple of contracts at the beginning and take sequential profits and work a position in. And then once you've got a good position going, try and let it run. But, you're taking on risk to work that position out. And I'm unsure if I really want to take that much risk like I did. You know what I mean? Like, I think I played it right in that I had the call right, and I did work the position to where I wanted to. But it's just like, what if it didn't work out? I probably wouldn't be... I would probably be losing more than I'm making right now on this coming back. So... I need to work out how to manage that better. Is the E-mini going to make the push finally and have an excursion above the opening price? Still being a little flaky there. We'll see. Joseph, I've never heard that name before. Who is that? Going long again. He's a serial killer? If you had the account size, how would you scale in 1,000 contracts in the E-mini? Right. Well, I would do it like I just did there, I guess. I'm not quite sure what you're looking for there. What I'm kind of looking for is I'm looking for a location where there's low latent liquidity that kind of gets them stuck. And then as they kind of try and get away from that location, that's where I try and work the position in. Because if I can get a little bit above that, so in this case, it was around 18. 18 actually ended up being the bottom of it. So when I was wrong, I doubled down in here, and then I worked the position up so that in the end, my break even is close to the high. And that's, I think, the goal is you want to make it so that when you include the profits that you've already taken in on it, that they would have to go and make, a new high or low of the day or whatever the critical point is that you think they would be trying to go for, so that if you end up being wrong, like, you really have to be like truly wrong, right? Would you enter in 100 or 200 contracts at a time? No. So if it was 1,000 contracts, I would probably do it in lots of tens. So that depends on the time of day, right? At the current moment, I think that, well, let's come and look at the feed here for a second. What do we got going on here? So there are some 100 lots coming through, of course. I don't know. As a retail trader trying to work in a position, I think that doing a lot of 100 at a time in this market liquidity might make you a target. So I think that you would be safer if you could do them in lots of 10. But you could do them very quick, right? It could be like 10. 10. Wait for the fill there. 10 again, and you could do it, but you could work it in very quickly. Another thing is what would be the time frame. So depending on how aggressive I think it's going to be. So right now, let's say I think it's going to move up, but the order flow isn't very aggressively long right now, right? And I think I would want to be risk averse. So probably what I'm going to do is I'm going to work in about 500 contracts first, and then see what kind of an impact that I have. And if I do seem to be having an impact, I'm probably going to wait 45 minutes, or it kind of depends on how much time I have, right? I'm going to wait a little bit of time, and then I'm going to try and do 250. Then I'm going to try and do 128, and then work out the rest of it. To kind of try and minimize the impact that I might have. That's how I would go about minimizing my impact. Now, like, what is the exact number of lot size that I can use is kind of like an iffy question. But I think that in ES, once you get over 10 or 20, it's something that you do have to start thinking about. Best entries are before fast moves. Not sure how you gradually enter that kind of a trade. Well, it would have to be a much longer term position swing trade, right? There are hundreds of thousands of contracts traded in the market would barely notice. That's not true. That's empirically not true. So remember, you invest $1 in a stock, it increases the market cap of the entire stock market by $5. So your impact, think about how much you think the market should move based on your 1,000 contracts, and times that by 5. Okay. If you traded 5,000 contracts here in the S&P 500, would it matter when they're trading 100 per clip? Would matter. Would 100% move the market. 5,000 contracts buying all at once in the S&P 500 would be like a 4-point move, right? So execution impact is something that you have to think about a lot sooner than retail traders expect. And the issue is that where do we get that from? So there is a study called the inelastic. Man, let me pull it up. I'll read it. You weren't here when we were reading the abstract the other day, so. So here's the study. This study is by Xavier Gabiax and Ralph S.J. Koijin. Well, when you start reading abstracts, you glaze over. Using a recent method of granular instrument variables, we find that investing $1 in the stock market increases the market's aggregate value by about $5. We also develop a new measure of capital flows into the market consistent with our theory. We relate it to prices, macroeconomic variables, and survey expectations of returns. Okay, so this is their research. Then we get this guy. So Bouchard, who is the research god, Jean-Philippe Bouchard. This guy, you've got to read this guy. He's so great. He knows so much about market microstructure. It's just crazy. He's the guy you want to read. And what does he say? The idea that it is the order flow that must be predicted, even if uninformed, resonates well with the intuition of finance professionals and allows one to understand why statistical regularities might exist and be exploited by quant firms. Indeed, flow data is quite popular among statistical arbitrage funds. The order-driven paradigm also allows one to resolve some paradoxes, like, for example, that it is surprisingly easier to find predictive signals for large-cap stocks, rather than small caps, because the former are more actively traded and the order flow reveals more statistical regularities. The 2007 quant crunch and other recurrent deleveraging spirals are also extreme consequence of the impact of order flow on prices. Would you say that your order has the same weight as an order from an institutional trader? I'm not sure about that one, Caleb. It's a good question that I would really like to know. I would really like to know, because I don't know if they have the way of telling. In futures, okay, so if we were trading a stock, I think that there's a difference. How that affects the market differently, I'm not so sure, but it seems because they're reading if you're trading it on Robinhood and they're reading your order flow, they can see that your order is a retail and that this order is an institutional. I don't know if they can do that in futures, but if they could do that in futures, I'm not sure how they would change things or weight things differently. But who peer-reviewed this? Well, so my understanding is that this is not, this is what is the word? This is still under review. This article, well, there's 2 articles here, right? Where was this one put at? Okay, this was put out by the National Bureau of Economic Research in Cambridge, Massachusetts. And this one is a peer-reviewed study. Look at all the people that he thanks for it, by the way. Jean-Philippe Bouchard. I'm such a huge fan of this guy. I gotta talk to this guy. Anyways, now this is a theory. You gotta understand that the inelastic markets hypothesis is a theory, but they have some empirical evidence to back up what they're seeing, right? So you can go through and you can look at their data and verify for yourself, right? This is empirical evidence. I wouldn't say it's still a theory. It's still the inelastic market hypothesis is still a theory, but there's some good empirical evidence in there. It tells us a lot of really useful things, right? So what is, and that's why I was coming back to this one. What Bouchard says down in here, that the order flow must be predicted even if uninformed. He's basically what he's saying here is that Keynes was right. So the reason that this piece of research is so significant is that there's been this argument about the efficient market hypothesis for the last 100 years. And the efficient market hypothesis has not been faring very well. And there's been a lot of question as to why aren't markets actually efficient and what are the actual implications of that based on what are the causes of that, essentially, right? And Keyes always said that, well, stocks don't actually reflect the real value of the asset. They reflect what people think other people are going to think. So he says, the way to invest is to try and predict what other people are going to do. That was Keyes' argument. And what they're basically saying is that their research on market microstructure and order flow supports what Keyes was saying, and that the efficient market hypothesis is just dead wrong. And as such, even uninformed flow can have a dramatic impact on prices. And again, this other, so if you get into some of Bouchard's other research, and you get into some of these models like the Kyle model that try and quantify how far an asset will move based on the number of contracts that you're trading, I think you're going to find that in certain market situations that the impact that your orders are going to have on the market is a lot more than you realize. So here again, 1,000 is not little. 1,000 is not little. It does have an impact. And if you were to come in and buy 1,000 contracts and then immediately sell 1,000 contracts, you would lose money. On average, you would lose money doing that. I heard that as well, that stocks move by the public perception. Yeah. Well, Tesla is like the perfect example, right? I don't really feel that the current price of Tesla is justified, right? But it happens because the orders are there to move the price to that location because people like the company, right? No, I just, so if you have to pick a position, either 1,000 will move the market or not. Listen to what I said again. If you bought 1,000 contracts and then immediately sold 1,000 contracts, you would lose money. So you would have an impact on the market. And then when you sell, your sell would have even more impact. And the net effect is that you tend to lose money. Tesla should probably close. I haven't looked at a chart of Tesla in such a long time. I don't really know where they're at. I know for sure that if you trade 100 contracts and you get on the wrong side of that, you are looking at hefty losses. Yeah. Would your buy of 1,000 move the market up? Yes, it would. we could estimate it. Well, to really estimate it accurately, we would have to do some history. So like what I can do is I can say every day come in and buy 1,000 contracts and look at what the average volume was when I did that and how much it moved afterwards. And you do that a couple of times, and then you can figure out what the scaling variable that you need to use for that asset. And then we would be able to accurately predict if you do 1,000 contracts tomorrow, how much will it move the market based off of how much the market was moving and how much volume there was at the time, or how much we would be likely to move the market if we traded 10,000 contracts. But yes, it would have some impact on the market moving it up. How far that is kind of difficult for me to calculate. But let's say, for the sake of argument, that it would be more than handle. Yes, so you go along 1,000 contracts, that moves the market up. Correct. Correct. I think I know where he's going, and it excites me because it's such an interesting fact about markets that most people don't realize. Okay, it says, so then you take 2 ticks profit and get out right. Well, okay, so just taking 2 ticks profit that's a little bit more complicated than that, right? You can't just come in and, just like you couldn't just come in and buy 1,000 contracts, you can't just come in and sell 1,000 contracts. There's not enough contracts at any one particular price to do that, right? What you do, you're going to come in, you're going to say, okay, well, let's start with 100. I'm going to put 100 here at 44.025, and then maybe it gets filled, and then they can't get through that, and they come down, and you go, okay, well, for the next lot, I'm going to have to move it down a little bit, and it's going to move even as you try and work it in. And the further, more time that you try and spread that out, the less impact it's going to have. But you don't think you would get filled? Why didn't you say that when we went long? Well, but I'm just saying that's not what I'm saying, that you can get filled. What I'm saying is that when you're saying, okay, you bought 1,000 contracts, it's going to move the market up, right? Well, when you turn around and you sell 1,000 contracts, it's going to move it down. Yeah? Because I'm not just saying you bought 1,000 contracts like with market orders all at once. That would be an easier way to think about it. Let's think about it that way. If you hit the market with 1,000 contracts all at once, it would move the market up a certain amount, right? Then if you turned around and you sold 1,000 contracts, it would move the market down a certain amount. With me so far? But what I'm saying is that because of some things that we know about how liquidity behaves in those situations, that sell would move it more. I'm asking if you could get in and out with no danger 2 ticks for 1,000 contracts. 2 ticks, maybe. Yeah, probably. Do you want me to pull up the formulas so that I can show you what things matter as to whether or not you would be able to accurately do that? I completely disagree. Well, I mean, if you averaged in if you're using limit orders only and you're looking for 2 ticks, you might be able to do it. It was that easy. Well, I didn't say that it was that easy. But I don't think you understand what I'm saying. Let me go back. Okay. Price is moving, whatever. I come in and I buy. Okay. I'm using limit orders or whatever the deal is. Okay. There's not enough contracts for me to get filled with 1,000. I mean, I could put a bid of 1,000 contracts out and see if they would fill me, but I might not get filled, right? So let's just assume that we're going to average in and everything else like that, right? The average result is going to be that the market is going to move up a certain amount. Okay. Now there's a formula that we can use to figure out how much it is. No. You're saying that it's practically a guarantee that you could get 2 ticks. That's not what I'm saying at all, Ace. Okay. So it has moved up 2 ticks now. You need to sell. Okay. The average result is going to be that your sell will move it down just like your buy moved it up. But because of the inverse sine law, it's going to move it more, right? So you're going to get there, and then this is where you're going to lose, right? So this difference right here between, here and here is your negative profit. That's where you lost money. That's, if you were just to buy and straight sell, that's what would happen on average. You would lose money. Is that, you get what I'm saying now? I'm wondering if I should try and do anything more with my treasury trade here, because it looks like, well, there is still an auction today, but I don't know. Either you think it would work minus 2 ticks every time, or it doesn't. Well, you would have to, the thing is that you're not going to be the only person that's buying or selling, right? So it could be possible that something else is going on and you end up making a profit. But what I am saying is that if you do this thing 1,000 times on average, you would lose this amount. On average, you would lose this amount. Yes. Oh, so now, but it did move the market, right? Did you not? Do you want to get on voice chat? Because I don't think you understand what I'm saying. I'm so confused why you're saying that. Right? This was a plus 1,000. And this was minus 1,000. You moved it both ways. Your buy moved it up, your sell moved it down. With a 1K movement, no, it wouldn't guarantee at least 2 ticks. You didn't understand. Because of the combination of the square root law of market impact combined with the inverse square law, with you can't just buy it and then magically get out. You have to sell it too, and your sell is going to have impact as well, and the sell moves it down more than the buy does. Exactly. AO, it's got it exactly. 2 ticks up, and then when you want to sell it, you could move it 2 or 3 ticks down. And then you would lose money. RJ says, who cares? Are any of us ever going to trade 1,000 futures? So here's why I'm saying why it matters, RJ, is that let's just say these 1,000 contracts. Why? Why? Why would this 1,000 contracts, why are they buying or selling 1,000 contracts? Maybe I'm buying this 1,000 contracts because I know that the Federal Reserve is going to do something. Like I have inside information. I know for sure it's going to happen, right? Then this has informational content behind it, right? There's real information that this 1,000 contract order represents that you would all like to know. And when you're looking at a chart and you're seeing a price and you can see that the market moved up here, right? That is that information that you're trying to find from using technical analysis, right? Okay. Now let's say that 1,000 contracts was me hedging a position because of some rebalancing that I'm doing in my hedge funds portfolio. Okay. That 1,000 contracts means nothing. There is no informational content in it at all. It is random. But guess what? It will still move the market and you will still see it on your chart. So now what do we have? Not every price movement that you see on your chart has informational content in it. In fact, I'm going to say that the majority of the information that you see on your chart has no informational content on it. It's just random. And how do you know which ones have informational content and which ones don't? Unless you heard a piece of news and you were also privy to that information and you saw it happen at the exact same time, you really can't, can you? That's why it matters. Because then at that point, all of a sudden, this nonsense about, well, if we're coming up into support and resistance and all, it doesn't matter. It doesn't matter because a random lot of orders could come in and move us up a certain amount and push it through that, no problem, just randomly. My question is, do I get my 2 ticks profit before the market moves down? No, you don't. Because your selling of 1,000 contracts would have an aggregate impact on the market. Yeah. Like if your buy moved the market's 2 ticks, then your sell is going to move the market more than 2 ticks. I don't see how, unless it's hard to buy or sell 1K of contracts. It is. I mean, I wouldn't say that it's hard, but you can't. It's not like you can just do it. I think he understands what I'm saying now. He says, I might have to think about that. You know, 1,000 is maybe not the best example, right? Well, it would be better for us to use a more extreme example. Let's say that it was 100,000. Okay, because you can look at the DOM and you can see the most that they're putting up at any one time is 200 contracts, right? If you buy 10,000, 100,000 contracts, it's going to move up a certain amount. I'm under the impression that 1K isn't that many. The big boys use way more. Well, okay, so that's not necessarily wrong, Ace. But what I'm saying is we're thinking of it from the perspective of like this. Okay. Let me see if I can try and improve this. Let's say that we have this market and it's doing all this and then it goes up. Okay. Oops. Okay. So from here to here is, let's say that that's 20 handles on that day or something like that, right? Hold on, the squawk is saying something. He was just giving an update, like, here's what's coming up, so that I know that it still works. Okay. So here you have the market, and this is like the movement for the day, right? And we're going to come in and we're going to say these aren't really accurate numbers. Let's try and get accurate numbers. ES futures. Okay, a million. A million is fair. Okay. So let's say that volume equals 1 million. Okay. So we moved up 20 handles. How many more buy orders than sell orders do you think that there were? And what I'm saying is this move could be less than 1%. Like literally less than 1% could cause that move at the end of, here in this case, 1,000 contracts. That's what I'm saying. The amount that 1,000 contracts will move the markets is way more than you expect. It doesn't matter that, like, that's how much the big guys trade. It's more of a, you're using up liquidity. And so the impact that your orders have is not relative to how big the other traders are. Isn't it 1,000 now 1%? If it was 100 and 1% of 100, oh no, you're right, it's 10. Gotcha. Okay, 10,000. That could be that move. That's what I'm saying. You guys watch the Flash? I don't know if I've seen a documentary called The Flash Crash or not. Maybe. Yeah, you agreed 10,000 is much more likely to move. Sure. Okay. But here we're talking about, okay, the aggregate amount that the S&P 500 futures moved that day, right? That the difference that it moved can be as little as 1% of the volume. Okay. So when we're coming back to our 1,000 contracts, is 1,000 contracts enough to move the S&P 500 futures up or down maybe 3 to 4 ticks? It is. It is. And that means that if you're doing 250 contracts, you kind of have to start to think about it. The reason why speed is important is because whatever that lot was, you can fit in your contract, by the way, buys and sells without you having impact and knowing that at least at time 0, there is no flow again. I think you're going to need to rephrase that. I don't know what you're trying to say. I mean, because I am kind of saying also that, like, if it's before the market opens and you went in and you bought, you just, there's 200 on the book right now. Okay, so you just market buy 200 contracts right then and there. And if you were doing it in a really dumb spot, market making robots could pull their orders at the 2 prices below you and move you down 2 ticks and try and stop you out. Yeah, that sort of thing does happen. Means speed means large size and urgency to fill in, right? Not necessarily. So that kind of comes back, like for instance, these sweeps that we've been having that have been so frustrating. Does that mean that they have urgency to fill it in and everything else? I mean, I don't know. I'm not sure if there's any useful informational content behind those moves or not, because we don't really know what's causing them. So as far as I'm concerned, it's noise. But I mean, with how this whole thing started, 1,000 contracts, you would have to work it in. We could try it. We could try it over here in the E-mini and see, like, how can we get filled before the top of the hour. You want to do that for 1,000 I don't know if Jigsaw will handle it very well. We'll do it in the micros because it would be the same thing. Let the liquidity. Well, it's about half. I don't know. Would it be fair if we say we do it in the micros? The thing is that I'm not going to have an aggregate impact on the market, but what I can do is I can say, we're going to split it up like this. How do we kind of try and work out what that's doing? I don't know if that would really, I don't know if you guys would really get a whole lot from that. It would be fun to do. Maybe not today. Well, I will lay awake at night now and worry about my impact on the market at 1,000 contracts. Well, so again, here's the reason why I'm talking about this right now is for a specific reason, and it's not to make you concerned about your impact. Okay, I bring it up sometimes when the market is really quiet because I see no reason to take the trade. Like, I think you take the perspective of, like, assume that I'm the big guy and that the market wants to stop me out. Why would I take a trade in a position where the market would even have the opportunity to do that? I want to time my trades in a situation where they would have to be stupid. They're not, it's much more important what's going on, right? The CPI was just released. You don't want to fight the CPI. Right? But the reason that I'm talking about it is because just think about what that does to your chart, right? So we come in and we say, we're looking at the S&P 500 and we're saying, okay, we're down there at the lows. They kind of pushed it down to 36 and then back up to 38. And now maybe they're finding support. So like a technical and analysis person might be saying, okay, this is rising and I should buy it here and it's going to go higher. I don't know. People come up with all sorts of crazy conclusions off of technical analysis. So it's hard for me to say, like, what would be the most realistic situation to happen right now? Because I'm thinking what it's most likely to do is just continue going sideways. But somebody might say, this is likely to continue going higher. I can come in and I can buy at 44.40. I can have a stop at 44.38, and it's likely to move up as a result. And that's my technical analysis. And what I'm saying is this. The fact that this was down more and that this one didn't come down quite as much, it's like the difference of 1,000 contracts, which is so trivial. The amount that the market moves, the amount of noise in the market is so much more than 1,000 contracts. These guys that are hedging big hedge funds and things like that, they're often trading a lot more than that. So this area right here, that it's noise. It means nothing. That they went down to here and then they've gone down to here. It literally, there is nothing that you gain from seeing that. Absolutely nothing. It is noise. And so many traders base their entire trading strategy off of trying to make calls like that based off of past prices. And you have to understand the market is not efficient. Orders move price a lot more than we realize. And as such, how are you pulling informational content out of this chart? Because it's noise. If the whole idea behind technical analysis is that everything that's known about the stock is reflected in the chart, it's not true. Like the entire basis of it is objectively and empirically false. Because the market is not efficient. The chart does not reflect all available information. The market is technically efficient, but it is not informationally efficient. That means that there is information out there right here at this very moment that is not reflected in the chart, even though they tried to trade it, just because the noise ends up being more than the information. You get what I'm saying? The concept of how large is relative. Well, that's kind of one of the things that I find is really interesting is that, you'd think that if we were to trade 100,000 contracts, they would move it 100 times more than my 1,000 lot, but that's not actually the case. Oh, so like we want to think of it as relative, like, my lot is only like 1/1,000,000th of the total volume of the S&P 500, and ergo it should only have this amount of impact on everything, but it actually doesn't work that way. It actually doesn't work that way. Because there's, the reason that it moves is because of the order book. It has nothing to do with the relative amount of how big you are. That makes sense? I don't know if I described that very well. That probably makes a lot of sense to me, but that maybe might not make as much sense to you guys listening. Seek out Smalling. I was saying the same exact thing earlier, watching a few videos on YouTube. These gurus analyze every single candlestick on a 1 minute or a 5 minute chart. Aziz says, so you don't use TA. I would think that there are times when I will unknowingly use TA, but I do not believe that the fundamental basis behind technical analysis, that is that all available information is reflected in the current market price, is accurate. No, I think that is empirically false. I believe that we have enough research out there now that we can say that that's just objectively false. That the market is not very efficient, and as such, you have to question what the chart is really actually telling you. That doesn't mean that I'm not going to use a chart, because if there's a move, I want to see that it happened and how far it went, and try and figure out if I can pull informational content out of it or not by looking at what people are saying. Oh, okay, that was because the Republicans did something, or because they said something about the debts, whatever it is. But no, I don't come in and I say, we just made a higher low, so now I want to enter it now and I should be able to get this much out of it. Or there's a head and shoulders pattern and so it should move down to this location now. No, I don't do that. What I'm doing is one, news. Two, trying to watch the order flow and finding if there are, specific moments where I can pull information out that might be able to predict the future order flow, which is not something you can see on the chart, by the way. And 3, manage risk, which means that sometimes, I think here on the E-mini is probably a good example, whether or not we end the day above 44.43 or below 44.36. I suppose now that we're at the bottom, it's more likely that we end the day below 44.36, but I don't really actually know for sure. I have no way of determining that. And every piece of research that I've done on my own, backtesting those sorts of things, tells me that whether it does or it doesn't is random. So if this trade works out, how was it? How did it work out? It had nothing to do with where I got in or how I read the chart. It was only because I managed the risk in a way that was favorable. So that's the managing risk part. I'm taking on risk. I'm taking on the risk of loss, essentially, and on the hopes that the market will pay me for taking on the risk, which is not necessarily the way that you would want to trade, right? Because it's up to chance. I would much rather trade on something that I know that provides me an advantage, but sometimes that's the best you got. Sometimes that's the best that I got. Hopefully we get better than that and we don't find ourselves in that situation as much. But it's been frustrating in the E-mini lately. It's been frustrating. Here we go with the TA. Yeah. Very good. A NASDAQ trader. If the order is large enough, the square root law entails that you can predict direction through speed in the middle of the actual execution of the large order. True, if you know how large the order is. Because if we're just watching the price, at any moment, that might have been the end of the order. We don't know, right? But maybe there might be situations that will tell us that the order is bigger, right? For instance, there was a piece of economic news and we're moving up on the piece of economic news. I can look at how many people are going to be affected by that economic news and may have to change their positions because of that. And therefore, I know that there's probably going to be more orders than the 1,000 that I've already seen. And then, yeah, absolutely can. And that's very much where I'm saying, like I'm using the news and I'm looking at the orders to try and find those sorts of things. Well, you can know how large the order is through speed. When you say speed, do you mean the market price moving quickly? What's considered a large enough order? I don't know. Like one of the things is, I'm not saying you should be watching the feed for a large market order. That's not necessarily what I'm saying. The thing that I think is going to tip you off, and I really don't know how to describe it to you guys. The speed of the order flow. Okay. You mean like the what is the word that they like to use? I don't know, like the pace of the tape. The amount of there's lots of volume coming in and prices moving around quickly. Does that mean that more size is being put into the market? Generally speaking, yes. But what I would say is go and look up the Kyle paper, and he kind of quantifies the properties that matter. Because you're right, like how far the market is moving on average at that time, and how much volume is coming into the market at that time, are factors that go into that calculation. They're the two primary factors. What about Forex where you have no volume data? Well, that's exactly why I don't trade Forex, because how am I supposed to predict future order flow? I can't see the orders. Yeah. But what were they asking before that? Anyways, I forget. I had a thought, but I lost it. Well, look at that. They did not take out the 44.36, and they're going back up to the high end of the range again. You should see the speed of messy tribbles. I don't know what you're talking about. Oh, now Nassim is also posting this thing about the issue with code as a law. Oh, he is a soccer player. Oh, okay. You guys. I should, if I got really into soccer and I was like, doing fantasy soccer leagues, that would help the channel out, wouldn't it? You guys in the UK, you love that stuff. Oh, that would be hard to get into. You have to stay up all night and stuff to watch soccer. I've enjoyed soccer from time to time. My dad played soccer in high school, back when it wasn't really a thing in the US. I know what I was going to say, but on the square root law, here's the thing: is what really matters. I think more. The thing that I look for more so is a situation where I know that the number of contracts that are going to want to trade on this particular information is way more than what can be factored in any one move. So there's a limit, right? There's a limit. We say here's like 1,000 contracts, and here's 2,000, and here's 10,000. And I'm not saying this is the way it is for ES, but I'm just trying to give you an example. People think that this is how much it moves at 1,000, this is how much it moves at 2,000, so the impact as they go should be like this. This is how far it moves, and this is how many contracts. But that's not what happens. It goes like this. There's a square root law. So if you do the equation, which is the delta change in price is equal to a constant times the square root of the size of your meta order over the average volume for the period. And this is going to be the change in price. So I can come in and I can say, what is the value of P let's erase all of this stuff here. How do I erase? I'm going to erase this stuff right here. And I'm going to say, what is this? What is the limit of this as Q approaches infinity? Right? And if the value of this is more than what I think the S&P 500 is going to move, then what can I do? I can come in and I can say, well, they already had a huge move, but guess what? I think there's going to be a continuation, so I'm going to wait for a dip and I can buy it. That's what I try to do. You don't get that every day, but that's my ideal trade. Well, actually my ideal trade is I take it as soon as I see the piece of news happen, and then when I see that pullback, maybe I get out because I'm unsure if it's going to continue. But if it's like, a jobs report and I really know it's going to go all day, hey, maybe add a contract when it comes back a little bit. Seth is a Jazz fan. You know what? I just haven't been watching any sports at all lately. I'm sure that will change at some point in the future. Maybe they will get more interesting, but past 2 years, sports just haven't been interesting. He had a 4-year, $700 million contract from Barcelona. Right? But yeah, we really don't know anything about soccer in the United States. Utah actually has a really good soccer team, but like that's the thing that's crazy about it, is that Utah has, I don't know what it's been this last year, but in years previous, Utah has won the championship in our soccer league several years in a row. So Utah has like the best soccer team, and nobody in Utah talks about it. So crazy, right? Well, I have no intention of trying to play around with this after, so I'm going to just put my contract out there now to see if I can get filled, even though I think, with the auction coming up and everything, maybe there could be, I think even the open or low of the day, I think still possible today, but obviously there's not enough. I think that what I caught was just the limit of the impact, right? No, I don't eat and poop trading 24/7. We can talk about the other things, but the thing is that a lot of my interests are extremely esoteric things that aren't necessarily popular. I'm wondering if there's something about it that I'm just attracted to things that aren't as popular. But, like you want to ask me about rave culture and electronic dance music, I can talk about that. If you want to ask me about arcade shooters, then I can talk about that. I guess I can talk a lot about Pokemon Go right now because we've been playing a lot of Pokemon Go lately. What else? What else is on my docket of... Oh, and weightlifting. You want to talk about weightlifting? I can tell you a lot about weightlifting, but I suck at weightlifting. I wish it wasn't true. I wonder how much of that is just my attitude about it, because I know that I'm never going to be the greatest weightlifter, but I do know that there's a lot more potential. I can get new PRs, but it's been really tough. And since the child has been born lately, it's been really tough to get into a really dedicated training schedule to get those new PRs. But I definitely think I can lift over. I think I could lift 80 kilos. I think I could snatch 80. Those aren't esoteric, yeah, but probably esoteric is not the right word. There's not a ton of people, particularly in the United States, that know a whole lot about Olympic weightlifting. In fact, it's kind of seeming like that Olympic weightlifting may just be straight up removed from the Olympics and nobody will care. This is insane. There's the Olympic weightlifting worldwide committee, okay? And these guys, they make money. I mean, because everybody that does weightlifting, they're paying certain fees and they make money, right? And they're basically like corrupt. So like all of the United States organization has said like, you guys need to step down. Like all of the weightlifting federations have said, you guys need to step down. Like this is not okay. And the big thing that's not okay is that they're not really doing anything about the doping. It's like they're getting paid off to allow doping. And as such, because they're not doing enough to police it, the Olympics are saying that we're just going to take weightlifting out. And so what do the guys on the board say? Meh. I would rather keep my money. It's like they would rather that it gets removed from the Olympics and they keep their money. That is the situation in weightlifting right now. And like, what you gonna do? People in the United States, they ain't gonna care. No, most people don't even really know a whole lot about it as a sport to begin with. That's something that shows up at the Olympics and that's it. And what does that mean for the sport? We call it, in the United States at least, we call it Olympic weightlifting. But if it's not in the Olympics, then that's kind of an identity crisis, don't you think? I wasn't hoping for a bigger push-up this morning or a big drop. Well, I wasn't hoping, but I definitely did think that there would be more of a push-up, right? I was kind of thinking, this move that we had in CPI is so much that it made, the S&P 500 might not see much more upside today. But I still thought that there would be a lot of people trying to trade it on the open. It seems though that the larger market, the stock nerds are not actually paying attention to this stuff. They don't really understand or care about it. And so we did not get that kind of a move on the open that I thought maybe we would. Is this only your fourth stream? Oh, what were we saying about the baby? Congrats on your newborn. Yeah, the baby is 18 months. Cute. For as horrible of a man. Come on. I'm actually not bad looking. It's just I'm getting old. I'm getting old in the eyes. Oh my gosh. I was hoping everyone would short it, but now I find any Tom, Dick, and Harry with a few contracts can rake the market. Yeah. See, just Ace, because I understand the whole that can't be possible sort of a thing. Realize what I'm saying is something that took us 100 years to figure out. That's incredibly counterintuitive because we've basically been looking on all the wrong places, and it was just once people really started digging into the order flow, it was like, oh, actually, this is what the reality is. But I think that it explains a lot. If any Tom, Dick, and Harry can move the market, then why is there so much excess volatility in markets? Well, there you go. Orders have a large impact on price, right? And there's certainly going to be what I'm saying is not going to be popular, because it goes very much against what people want to believe about trading. Because we want to believe that I can look at the chart and determine what's going to happen. That's human nature. Human nature wants to find patterns and make predictions. That's everything that we try and do. And based on the empirical evidence, if the elastic prices are inelastic theory of markets is true, then that is final conclusive proof that all of that stuff is nonsense. And that your ability to really predict future order flow is really, really limited, especially on short time frames, right? I can come in and say, well, the Federal Reserve is keeping interest rates easy, and so you're going to see a lot of flow into capital markets. Yeah, that one's good. Easy, and that was one of the primary things that we should be looking for in terms of predicting future prices, right? But will there be an increase in the number of market orders in the next 5 minutes? That's super hard to predict, isn't it? How do you deal with that? I'm not 100% sure. You kind of have to change your approach a lot based off of that information. Try and find inefficiencies that you know exist that are about more than just some price pattern that you saw, right? By a few, I mean over 10,000. Well, the reason why AO is talking about it is that from what he told us yesterday, AO has a large enough account that if he really wanted to lever all the way up, he could trade 1,000 contracts. He really wanted to do an all-out YOLO on a particular trade and either double his money or lose everything. He could trade 1,000 contracts, I think, and that would be like $500,000, right? With day trade margin, at least. Dum, dum, dum. Anyways, oh yeah, the baby is 18 months old this month, and he's really big. Still doesn't talk though. Still doesn't talk. Still can't really leave him alone because he just gets into everything. Crypto market cap 1.87 trillion. US high yield index 1.67 trillion. Wait, what? Really? I know some traders that many cars, but I am not suicidal. Sorry, folks. I brought, AO, like one of the things is because you were talking about sizing rules and everything, which is absolutely the right way to do it. But the ironic thing is that the most retail traders are starting with an amount of money that's less than they should actually be trading with, which I mean is okay, but at that point it just comes back to this thing that it's like you realize that you're taking on risk, and as long as you understand that, then you're managing it properly. Well, I was trying to do some research about that yesterday, about like how can we deal with the risk better, especially like once we're in a trade and so forth. But like the thing is that risk is not really so much a tangible thing. Like when we think about risk, what we're thinking about is price risk, right? There's more other risks, right? Like you coming in and saying, well, I know that there's a news event here in 5 minutes, and so I want to take my trade off before that because I don't want to expose myself to that volatility. It's going to be larger than my stop. That's managing risk, right? That's managing known risks. Trading is hard. It's not dull. I agree. I've been writing a script for one video about is trading really for you? And, one of the things I was saying in it is like, if it's that you want to make money, almost anything. Do almost anything else. Go to a coding camp and get a job coding. That's the easy way to make money in this economy. What's a snatch? A snatch is where you have the barbell on the ground. You take a wide grip where your arms are pretty close to the end of the bar. And then you lift the bar up in one movement above your head. And that's a snatch. So that's the first lift that you do. And then the second lift that you do is the clean and jerk, where you lift it up to here and then you jerk it above your head. When I was in high school, snatchment, yeah. Well, it's kind of like why are all of the terms of the lifts in Olympic weightlifting have some sort of sexual connotation. Snatch, clean and jerk, like, come on. But, you know, it makes for many great merchandising opportunities, apparently. I have a BSEE. What is that? Bachelor's of Science in Electrical Engineering. So average salary at graduation is probably 50 to 75, and they can easily get 100K at graduation. Well, yeah, but electrical engineering is actually hard. Like, here's the thing. Computer science can be really, really hard too. Sometimes, it's not every day, but sometimes what I'm doing in my job I find challenging, and there's a lot of information that I have to learn and know and stuff, right? But like these coding camps, there's a lot of stuff out there that is just like, you just copying code. It's really simple stuff. And yeah, you could go to a coding camp and probably get an 80K job easy. Like, go to a coding camp for a month and then get, you know, an 80K job. For a lot of people out there, that is really significant. 80K, like, here in Utah. Like, come on. Probably in Utah, you're more likely to get 60 or 70, but I digress. That seems to me, in terms of the amount of money you make compared to the amount of money, amount of effort that you put into it, the biggest reward that you can get right now, I think, is in coding. Am I wrong? Is there another place where you can make more compared to the amount of effort that you put into it? I would be interested in knowing about it. I agree. My first intro to coding was in 83. I don't know why my father didn't push me to that. Yeah, no, it's not. Day trading is like the hardest thing you can do. So my argument is that when you want to look at the amount of reward that you get to it compared to the amount of effort that you get in, that day trading is probably the lowest yielding on that metric that's out there. Guaranteed 2 ticks. No, you're guaranteed to lose 2 ticks, basically. Like the whole thing, again, like the point of the square root law, or sorry, the inverse sine law in particular, is basically that you can't make money just from pushing your weight around, basically. So a lot of people want to think that that's how it works. But the reality is that you need to have other people come in to push it up for you to make money. Yeah, stare at the screen for 16 hours and still lose money. It happens. That's why I trade at Starbucks, so all the chicks can see how awesome I am. Oh, man. That reminds me of that Napoleon Dynamite scene where he's like, you're just mad that I'm talking to hot chicks all day. I gotta go, guys. I'll see you tomorrow. Stay profitable, friends.